Hello traders, today we want to discuss Qualcomm technology, stock and technical analysis. Qualcomm technology, stock and technical analysis. All right. So the epic of the stock that we are analyzing is QCOM. Quebec, Charlie, Oscar, Mike. This is a NASDAQ 100 component. Qualcomm Incorporation. I hope my pronunciation is correct. If not, let me know in the comment section. All right? I'm on a monthly chart as always. And we want to talk about Qualcomm or Qualcomm technology and technical analysis. The Qualcomm is a world leader in 3G and next generation mobile technology. So we have a 3G technology, a 4G technology. So if you are still using 3G, it means that you are a little bit behind. Okay, so on your smartphone, you should see 4G. All right. There is a talk about 5G. And apparently, the 5G mobile technology will galvanize services such as autonomous vehicle. Think of Google car, all right? Okay, autopilot cars, all right? So the 5G will be a technology for those type of cars, self-driving car, all right? And also cellular connected drones. So 5G will be part of cellular connected drones, all right, and also real-time health care. So there is a bit of future. There is a future definitely for this Qualcomm stock. And now, apart from the Qualcomm, there are other industry peers for Qualcomm. We have Texas Instruments, Broadcom, Skyworks Solutions, Linear Technology, and other company like Marvell Technology. I'm not talking about Marvel episode on Netflix. We are talking about a company called Marvell with a double L at the end of Marvell Technology Groups. All right. So for us, technical traders, anytime we want to buy or sell, we will combine the technical analysis with the fundamental analysis. First thing first, we want to look at the charts of Qualcomm Incorporation. Where are we? Okay. Where are we heading to? All right. That's the question. So for this stock analysis, I will be using the pitchfork tool, the most neglected trading tool. You can see on my chart here, I have my brown pitchfork tool on my chart. I will be talking about Fibonacci, retracement. All right. We will be talking about also market geometry to determine where is the best time and also the best price, to buy or sell a Qualcomm stock. Before we continue, I need to remind traders and investors that this video tutorial is for educational purposes only. It's neither a solicitation or an offer to buy or sell a Qualcomm stock. Let's get started. All right. First thing first, we have on this chart a bat pattern. So you may see, George, are you a Batman? I'm not a Batman. All right. So it's a Fibonacci pattern that is called a bat pattern. So there are videos at Day Pro Traders YouTube channel. So check our video about bat pattern recorded by Day Pro Traders YouTube channel, or visit www.dayprotraders.com and you may see a video about bat pattern. The anatomy or the price structure of the bat pattern. The first condition is that we must have, for a bearish bat pattern, we must first have a bullish trend. That condition is fulfilled here when the Qualcomm stock was bullish from 1999 up to 2000. All right, so this is a fast move though. In 1 year, the stock went up from a penny stock to this level of $99, call it $100 level. Fast move. What a beautiful stock market. All right, then after that, there was a complete retracement, 100%, almost 100% retracement, and the price pulled back here. So you may say, George, so that's the first condition for the bad pattern, bullish trend. And the second condition is a pullback that does not cancel completely the prior trend. So this is the pullback. That pullback, we call it XA. Also, you may say to me, George, what is SA? X stands for S-ray, the letter X for S-ray, and A for alpha. So this point here, that's what we call X, and this point here, we call it A. So for the bad pattern, after the XA, bullish trend followed by XA, the financial instrument should rally up to the 50% Fibonacci retracement level of the SA. So this price move from here to here, it starts the 50% Fibonacci. You can see on my chart, hold on please traders. Yeah, that's the 50% is not the pink line, it's the dotted line above the pink line. All right, I need that pink line, so that's why I don't want to remove it. So remember that the 50% Fibonacci retracement level of the SA is not the pink line on my chart, it is the dotted right line at call it at 55, 56, 55, 56, okay, level. All right, that's the dotted line right here. Okay, let's put a line there so they can follow what we are doing. That's the black line above the pink line. So at that point in time, so there was a bullish trend followed by a pullback, and then we have a rally, out into the 50% Fibonacci retracement level of this XA. So the point C for Charlie, for the bad pattern, I can put it here or here because it's a complex correction here, if you like to call it that way. You can put it here, Santo Demese here. The retracement of B, this is point B to point C, should be between 38.2% and 88.6% Fibonacci retracement level of A, B. This is A, this is point B. So this move down, which we are calling BC, should be a retracement that is between 38.2% and 88.6% Fibonacci retracement level of AB. So we have A, B, C. Now the target for the bearish Fibonacci pattern, the bearish bad pattern, is at the exact level is 88.6% Fibonacci retracement of the SA. Don't get confused. If there is something else that you do not understand, or if you do not understand my beautiful accent, you may replay the video and watch it few times, all right? That session, all right? Move it back, move it forward. So here it is, the 88.6% Fibonacci extension level of the SA is at $89.37. That's the exact level where the professional should expect, a bearish bad pattern to be completed. So normally the price should go up to this point. For one reason or another, you can see that the price stopped at 75%, at 70. The price stopped at 78% Fibonacci retracement of SA. So it did not go all the way to the ultimate target at 88.6%. This is the reality of the market. So in theory, the bad pattern should end at 88.6% Fibonacci retracement level of SA. But when we are talking about the reality of real-time trading, practical trading, sometimes it takes time for the price to reach the target level. Price may go blah, 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 and then at the end, it will go to that level. But there is a reason why the price couldn't, reach that level. You see the edge of the pitchfork tool. So the price was, so if a bullish trend is underway, you can see that it start going up from 2003 when I pull back a bit from in the BC. Now it start going now to form the C to D. This point D. A, B, C, D chart pattern. Go to www.stochastic-body.com, click on ABCD chart pattern and also ABCD extensions. All right. You may understand more the pattern. But now we are not talking about the ABCD chart pattern, but we are talking about the bearish bat pattern, a Fibonacci pattern. The first condition, we must have a bullish trend followed by a pullback, and then the price start going up A, B, C, D. For the bad pattern, in theory, should end at 88.6% Fibonacci retracement of XA. But it did not because of the pitchfork tool. Because the pitchfork tool, which I was telling you before 100 times, all right, is the most neglected trading tool that the professionals are using all the time. So though the price was going up, professionals know that, oh, we are in the edge of the pitchfork tool, they quickly take profit at 78% Fibonacci retracement of SA. One more thing, there are a lot of aggressive Fibonacci traders that always sell at 78% Fibonacci, okay, retracement level after a downtrend. So there was this SA, which was a down move. As the price rally to 78%, there will be sellers. The same thing is happening. You see here, we have a bullish trend in 1999 to 2000. It was a bullish trend. As the price pulled back to the 78% Fibonacci retracement level of this move from here to here, they quickly bought it. There are investors buying or selling, so the 78% Fibonacci retracement level of this bullish trend from here to here is somewhere near the level of $20. Let's call it in the zone of $20. Okay, I know that I've done it before. I don't want to draw another line. You can check it out yourself. It's near the $20. So the price D below the 78% Fibonacci retracement level of this bullish trend, D below it, and as it goes above it, okay, smart money bought it, okay, and then the price went up, okay, to the pink line. I will be talking about the pink line very shortly, okay, or I will be talking about that very shortly, all right. The pink line is the 50% Fibonacci retracement of the bullish trend. This bullish trend here, that pink line is the 50% Fibonacci retracement level of that bullish trend. And that 50% Fibonacci retracement level is dividing the market into two zones. So there is a bullish trend followed by a pullback. If the resistance that professional watching after the price start going up is the 50% Fibonacci retracement level of the prior trend. So you want to understand what's going on in the financial market. 78%, there are investors, all right, looking for opportunity to buy or sell. You see here, reaching the 78% level. There were people challenging the price. The price couldn't reach the 88.6% level. They sold it down. Here you can see the price went up from 1999 to 2000, pulled back to 78%. Investors went below it. Investors were hanging around here, examining, okay, the fundamental, the market environment. Boom, 2003, they bought it. As the price was going up, they know this 50% Fibonacci retracement level of the prior trend. And they took profit there. Price returned back to the same zone, they push it down. So we say that that 50%, the pink line, is dividing the market into two zones, the bullish zone above and the bearish zone below. So now finally, though we have a bearish bad pattern that couldn't reach the 88.6% okay, target level, it's a bad pattern. Remember, it is a bad pattern. Sometimes may say, Joe, this is a Gartley pattern. No, in theory, it's not a Gartley pattern because the Gartley pattern, the A to B should be exact, should retrace the SA exactly at 61.8% Fibonacci retracement level. That's the theory. The SA, you see this here, this is what we are calling SA. This is the correction traders, the AB, correction traders, the AB for a Gartley pattern should retrace the XA at 61.8% Fibonacci is a retracement level, exact 61.8% for a Gartley pattern. In theory, apparently should be exactly 61.8% level before we can talk about Gartley pattern. So though the point D for delta for the Gartley pattern is a 78% Fibonacci retracement level as it is here. This pattern here is not a Gartley pattern because the AB did not retrace, okay, the SA exactly at 61.8% level. So we cannot call this pattern a Gartley pattern. It is a bad pattern that has failed to reach the 88.6% profit target level. Okay, so the bearish bad pattern, all right, is completed at point D. But you see what's going on? Investors sold it here at 78% instead of 88.6%. The technical trader that are watching the prior also noticed that we are on the edge of the, okay, the pitchfork tool, and they sold it, boom, down. All right, look where the price went down. Okay, came down all the way here. All right, so one more thing I need to clarify with traders. You remember I was talking about the characteristic of a financial instrument, that some financial instrument, okay, follow a specific pattern. You may notice that some stock, all the time they will retrace to 78% and investor will buy it. This is the pattern that we have observed over the year. So we may say that is a characteristic for that stock. Some stock you may notice that if you check them on over the year, you may notice that over the year those stocks are only retracing between 50% and 61.8% level. Dynamic bullish stock very often will retrace only down to the 50% and 61.8% Fibonacci retracement level over the year. As a stock trader, you want to understand the characteristic of a financial instrument. All right? You want to understand that. Very, very important. So this stock, after a bullish trend, look what's happened. It retraces 78% Fibonacci retracement level. Look, as it starts going up again, it went up again to 78% Fibonacci retracement level of the SA. So you may say that this stock is respecting a lot that 78% Fibonacci retracement level. You can understand why the professionals were quite happy to sell it here. There is a pattern that is developing right here. All right, 78%. We can see that it's one of the characteristics of this Qualcomm stock. All right. All right, it makes sense. Okay. So the stock when we see now it went up all the way here. All right. Now let's use now. I'm going to use another 38.2%. That's 38.2% retracement here. So as it went up to this point, it pulled back again right here to the 38.2% Fibonacci retracement, all right, of XA. But the bearish bad pattern is completed here, but people sold it. Normally, for the bearish momentum to continue, the price should stay below the pitchfork tool, because the pitchfork tool is highlighting the possible path of the trend. So you see this move here is up move. It's a rising pitchfork tool. So the pitchfork tool is telling us that the price has a high chance to stay within the boundary of pitchfork tool or to go above it if it's bullish. All right, but if it goes below it, it's telling us that the bullish momentum is diminishing. So now the stock they push it below the pitchfork tool. By reality, they force it back inside. So we can say that the bearish momentum that has started here is a little bit diminished because the stock manages to go back inside the pitchfork tool. So therefore, as a technical trader, you see the pitchfork tool is divided into two smaller channels. You see, this is the lower part of the pitchfork tool. This is the upper side of the pitchfork tool. If we draw another line that is dividing the lower part of the pitchfork tool into two, that's the median line of that lower part of the pitchfork tool. The price is now on the edge of the pitchfork tool here. In my view, it will be better for this stock, Qualcomm stock, to pull back to this level of $50.95. By the way, as I say to traders, this video is for educational purposes only. In my view, humble view, personal view, George views, all right, it will be better for this stock to pull back to retest the $50.35 zone before running away, okay, one more time. That will be a reasonable move, a reasonable, okay, price action. But we will see whether it continue to go up into the channel, preferably above the median line of the pitchfork tool that remain to be seen. All right. So now we look at it, we see a bearish bad pattern that is completed right here. People responded, so the stock pulled back a bit. One more thing I need to clarify with traders. So I'm talking about a bad pattern. All right. But look, as the price is moving forward, okay, there are other patterns that are appearing now. There is another pattern that is appearing now. Hold on a second, traders. I'll be back in a second. So which pattern am I talking about? So if you look again, so we can look at another Fibonacci pattern that is developing again. Attention please, traders. So we talk about a bearish bad pattern that is completed here. People responded and saw the stock went down near the level of $39.30, okay? Call it $40. But now there is another Fibonacci pattern that is developing. So for the Fibonacci pattern, here again, we have a bullish trend followed by a retracement. That's the beginning of a new Fibonacci pattern for Qualcomm stock. All right. Now the stock, after a bullish trend, a pullback, if we pay attention only to this point here, where the price pulled back recently, all right. Stay with me. You want to learn to trade stock like a pro? Here we are. Watch the full length for this tutorial so you may understand. So sometimes there is a pattern that is formed, and then another pattern will form, and then another pattern will be formed. But then people switch off. They miss the plot. They don't see everything, all right? Now you understand why I say to you to keep your eyes wide open. So now, there's another pattern that is being formed. So a bullish trend, a pullback. Now the price is now at 78% Fibonacci retracement of SA. This is still our SA of our new Fibonacci pattern. So which pattern? Talking about this point here, this is A, B. So a 78% Fibonacci retracement level of SA at 78%, a 78% Fibonacci retracement level of SA is bringing into our mind which pattern? Yes, the butterfly pattern. All right, the butterfly pattern. So a new Fibonacci pattern is being formed now, and that pattern is what? The butterfly pattern. For that new Fibonacci pattern, the point A is still the same like the bad pattern as we have seen before. You see now? So this is point A for the butterfly pattern. This is point B for the butterfly pattern. Okay. Now this is what? This is point C for the butterfly pattern. So what is going through the mind of a lot of Fibonacci pattern traders? For the butterfly pattern, they will say that this stock, all right, this stock has a high chance to go to which level? The first target for the butterfly pattern. Here it is, the 1 to 7% Fibonacci extension level of the SA, not the trending phase, the pullback of the SA. So those Fibonacci traders will be expecting Qualcomm stock somewhere in the future, provided that they are gaining more market share. They are coming up with excellent products. People are willing to buy their product, all right? And the market, the S&P 500 itself is still bullish, which S&P 500 is now at a resistance level. It's in the fifth wave. The question is, it is the right time to buy Qualcomm stock and hold? because we are trading first the market before the individual financial instrument. A financial instrument may be discounted, maybe okay, bullish, but we want to align the time where we are buying that financial instrument with the market. Because if the market becomes bearish, it will drag a lot of stock with it. But it doesn't mean that those companies are not productive. They are productive. It's just the sentiment will influence the investors' decisions. So Fibonacci pattern traders who are able to identify now that there is a butterfly pattern, a bearish butterfly pattern that is developing, the target for the end of that butterfly pattern, the first target, is 127% Fibonacci extension of the SA. The next target, which you cannot see on this chart, is the 161.8% Fibonacci extension level of the SA, somewhere up above the 140 level. So first target for the butterfly pattern, 127% Fibonacci extension level of the SA. Second target, 161.8% Fibonacci extension level of the SA. So there we see first the bad pattern that is completed right here. People responded and sold it. Now a bigger pattern is building, all right, is growing, all right, and here it is developing, is a butterfly pattern, all right. The AB should retrace, okay, the SA at 78% Fibonacci retracement level. The B to C should be between 38.2% and 88.6% Fibonacci retracement level of the AB, and the C to D should be either at 127% or 161.8% Fibonacci extension level of the SA. So those are the targets that the analysts will be putting aside for Qualcomm stock in the near future, okay, or in the far future, all right, depending on the stock market. The stock market is bearish, all right. It's not a right season to buy and hold. The stock market is bullish, or what I say to trade, when the stock market is changing from bearish to bullish, you can see the S&P 500 was changing from bearish to bullish in 2009. That's the right time to look for stock that are discounted, stock with quality stock, okay, that have a brighter future. Now the S&P 500 is now going up, trending for since 2009. It's now at the top. Is it going to change from bullish to bearish? Now the question is, all right, is this the right time to buy and hold stock? Okay, it's up to you. So the objective of this tutorial is to teach traders how the stock market functions and how they can participate in the stock market without losing their shirt, so to speak. All right? So we see it from two angles so far, from the angle of the bad pattern and also from the angle of the butterfly pattern that is developing. Personally, as I said before, you see here, you see how the AB, you see here, the AB of the bad pattern, you see, it pulled back. So it pulled back first time, you see here, it's not straight line, you see, it pulled back first time, went up, pulled back again here, went up a bit, and then pulled back again. So though I'm saying to you that we may see a bad pattern, the price may do all sorts of ups and down here for some, maybe a year or month or weeks or days before heading up. But the bottom lines, before we can buy any stock, we want to see whether it's a quality company. So Qualcomm, you can see, it's a world leader. So it's a leader, good. A leader in what? In 3G and next generation mobile technology. So are we going to use more smartphone in the future? Yes. All right. Is every part of the world using smartphone as we do in the Western world? No. There are other parts of the world that are still waiting to embrace, okay, the internet, okay, the smart technologies out there. So can we say that Qualcomm is as a market leader in that group, likely, okay, can we say that Qualcomm has a brighter future? Yes, it has a brighter future. Now we want to check the competitors. Is Qualcomm likely to gain more market share? Right now, they are the leader in that group, 3G, 4G, talking about 5G. Okay, we are talking about autopilot vehicle. We are talking about cellular connected drones, real-time healthcare. Is it looking good for Qualcomm? Yes, I think Qualcomm has ticked all the boxes of quality stock. Now, the next step is to go now to Google Finance. Now, perform Google Asset test, which means you can have a quality stock, but that can fail Google Asset test. All right? You can have a quality stock, all right, that may have a weak balance sheet. So now people should go to Google Finance now, perform a fundamental analysis. So if it's a quality stock with a strong fundamentals, this is good, isn't it? Now, the mistake that we do not want to make, this is about the timing. Timing the market. You want to buy the stock, you want to buy it at the right time. Suppose, my friend, you were here when the stock went up to this point. So you were reading your newspaper, they say Qualcomm is excellent company. Yes, it's true. They are making explode, they have a brighter future. Yes, it's true. Okay? They will get more market share. They have a strong balance sheet. Yes. And the market was bullish. But in 2014, the S&P 500 was bullish. But suppose you bought it here. Look, is it a good timing? This is what we are talking about. As a technical trader, our expertise is about knowing when to buy and when to sell. I mean, at least we are better than fundamental traders at choosing the right price to buy. But the problem that we are facing as a technical traders is because some of us do not use fundamental analysis and we get into trouble. So you see now, so personally, in my view, I would prefer it to pull back, okay, to the $50.95. Am I saying to people to sell? No, I'm expressing my personal view. The price now in a rising channel, it went back inside, which is telling us that the bearish momentum here is diminishing. Will it continue straight line, only in a straight line, all the way to that $123 zone or beyond? That's the question. All right. Let's remove my Fibonacci retracement here, because I was applying my Fibonacci retracement to this XA. All right. So I have now finished to talk about the Fibonacci pattern in relation to Qualcomm stock, the 3G, the 4G, okay, a market leader. All right. So now what I'm going to do, this time, I'm going to apply the Fibonacci retracement. By the way, if you do not know what is a Fibonacci retracement and Fibonacci extension, which some traders do not know because they are beginners, remember when you start trading first, go to dayprotrader.com or subscribe to Day Pro Traders YouTube channel or watch every playlist about Fibonacci by Day Pro Traders YouTube channel. All right. So now I'm going to apply Fibonacci retracement to this to the trending phase, and I want to highlight a few key levels for traders and investors that are salivating to buy and hold Qualcomm stock. So as I explained to you before, the peak line is the 50% Fibonacci retracement level of this trending phase. There is another key level that the professional watching. That level is the 61.8% Fibonacci retracement level of the bullish trend. That level is $30.39. Correction, traders. Am I getting hungry? Hold on, traders, please. Let me drink something. I'll be back in a second. The 61.8% Fibonacci retracement level for Qualcomm stock is $39.50. All right. So you want to know, because the price here, it pulled back into that zone. That's what we call the sweet spot Fibonacci zone. So there was a bullish trend, blah 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 blah. A bad pattern is formed. Okay, now a bad pattern is formed. Now a butterfly pattern is developing. So the price pulled finally back to that sweet spot zone after going now from 2002 all the way to 2014. You see, so there was a trend, price pulled back, and then it started going up. It went up to this zone of $80. Now it pulled back again to that sweet spot zone between the $39.30 and the $50, okay, 95. And there will be investors and smart traders always buying in that sweet spot zone of a prior trend. So it went above the bullish zone, which is the zone above the 50% Fibonacci retracement level. Now it pulled back to the sweet spot Fibonacci trending zone. Now you see it's going back inside, okay, the channel. But the duality that we are facing right now, all right, the duality is that this stock is a quality stock, all right, strong fundamentals, brighter future, but the market is at a resistance level and the market is in a fifth wave. Should one buy now or sell now Qualcomm stock? Or should one wait? Should one be more patient? Personally, I will be patient because if the S&P 500 start becoming bearish, it will affect many stocks. All right? So, a bearish move down here, and then a price rally up a bit. The dominant force in this section here is what? Is bearish. Have you done whatever we call it physics at school? Dominant force. That's the dominant force. Right? So it's a bearish force. Now we have a mini, okay, bullish force that is not equal to the bearish force. So the bearish trader that was selling first will be happy to push it back down a bit. And if they fail to push it down, the bull will take over. But for this stock, okay, for the sentiment, technically speaking, to remain bullish, the stock should stay above the $50.95, which is the 50% Fibonacci retracement level of this trend here. So that pink line is very important. If it's pulling back, it should find a support above it. But if the S&P pattern becomes too bearish, we are waiting for a new administration. Election is taking place in the United States this week coming up. A new administration, probably a new Federal Reserve chairman or chairwoman, probably a new monetary policy. The smart money is waiting for a stable data before they will invest again for long term. All right. So when we draw the Fibonacci retracement to this trending phase, the two key levels that we want to remember are $39.30, $50.95. All right. If we are paying attention to the butterfly pattern that is developing, we should not ignore the 1 to 7%, all right, Fibonacci, extension of that XA, all right, which is at $123.71. If it goes above it, be aware of 13315 and the 161.8% Fibonacci extension level of this SA. How long have I been talking to you now, my friend? For 39 minutes. We will stop here. And if you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. If, for instance, my friend, before we go, the stock, all right, break below, stay below this pitchfork tool, we will measure the width of the pitchfork tool and we project it in the direction of the price, talking about what, all right, the market geometry. So we will measure the width of the pitchfork tool, and we will we will project it into the direction of the price, and we will draw a line that is parallel to the pitchfork tool. This is about the market geometry. Alright? And therefore we have a new channel. You see the width of that pitchfork tool. We project in the direction of the price. If the price starts coming down, you want to know that there is another channel here. So if the stock break below the $50.95, watch out for the next level, $39.30, on the edge of this trend line here. Do not forget also, all right, the media line of the second channel. So you see here, as the price was going down into the sweet spot zone, it stopped at the media line of our new channel. You see the new channel? This is the top of our new channel. This is the lower part of our new channel, and this is the media line. But as they start selling it here, the price stopped at the media line of our new channel. This is a market geometry that the professionals are using. If it breaks below that channel, we'll project it one more time. And all we need to do is to use that width and to draw a line through that place, that is to the point. All right? And then we have another channel. If it goes above that level, heading towards the $123.71 in a bullish market, very important, we draw another line, we project that width in the direction of the price, and we draw a line that is parallel to our pitchfork tool. And with those trend lines, we will be able to manage our trade and buy at the right time and also at the right place. The pitchfork tool, the trend line, the horizontal support and resistance level allows traders to time the market, technical traders, to time the market more accurately than the normal fundamental traders. I hope you have learned something from this video also, and will put into use to make excellent day swing and investing decision. We are the TSTW SYS 008 traders talking about Qualcomm technology stock and technical analysis. Happy trading to you all, and speak to you soon.